Good afternoon, ladies and gentlemen. Jeremy Johnson here with the September monthly market update for you guys, and it's going to be a three-part as usual. I know it's been a couple months since I've done one, but it's going to be three parts. First one we're going to hit on is, of course, mortgage rates, the hot topic out there right now, and what the Federal Reserve is doing with or projecting, with interest rates. Part two will be on market dynamics, what's going on, and being why it's so important to understand what market you are in, and then we'll wrap it up with pricing strategy and why pricing strategy is going to be more important now than ever, especially when you're on the listing side of pricing. So we're going to start off with this slide here on Federal Reserve and interest rates, and a lot of you are probably tracking this. I've had a lot of clients reach out to us about refinancing as well, and they're pretty aware of this. It's all over the news right now. But this slide here is the Fed Chair Powell signals time has come for a separate September rate cut. So that meeting is supposed to be September 18th. And as we sit today on September 11th, rates are roughly around 6.11 for a 30-year fixed and 5.7 for a 30-year VA. So they've been kind of trickling down already. But all expectations are there's going to be a rate cut, at least one, and we'll talk about it in a minute, two rate cuts before the year is over, with the first expectation being next Wednesday, September 18th. And they ask why, what's the driving force behind these? And the next two slides are going to really show that. And we've talked about it on, I've talked about it on some previous monthly updates. And it really boils down to inflation rate and unemployment rate. So this first slide here is going to show you where we were at the end of August on inflation rate. And the target's always been 2%. And we are down to 2.6 and have been there for about 3 months. But you can see how it's been trekking down closer to that 2% rate area. So that's one big driving factor. And then this next slide is the unemployment rate is rising, which will signal a policy change as we get closer to the national average of 5.6. Right now, it rose this past month to right around 4.3. So inflation coming down, unemployment rate, unfortunately, ticking up. Which always signals some kind of a policy change is needed, and why Senator Powell has came out and said, "Hey, it may be time for that the Federal Reserve to consider a rate cut." And that meeting is next September. So this next slide is going to show you where we've been since 2018 on mortgage rates with the 30-year fixed rate. And then the projection through 2025, and you can see Fannie Mae, Fannie Mac, NAR. These are all their not recommendations, but their expectations and their predictions of what the interest rate's going to do through 2025 of next year. So you can kind of see where that line is trekking down. And I'll tell you, and we've talked about it before too. This is really good for our clients that, or if you're sitting in a 6-7% interest because you bought previously for the potential of a refi. And we're getting a lot of phone calls from our clients. Is it the right time to refi? And our advice always is, and we're currently in one right now. We closed at 6.5 last October. So our advice that we always give them is you want to pay no points for it. And you want to save at least 1% on that refi, and as cheap as possible on the refinance fees and the lender fees will be a good indication. Then how much are you going to save, per month on your mortgage? Are you going to make that up in 36 months? So that's advice on the refi. And if you're buying, I'll tell you, and we've told you before, Bright MLS came out with a report that they did that they expect about 70% of potential buyers abandoned the market this year due to high rates. So you can see where I started this off. We're at 6.11 for 30-year fixed, 5.7 for VA, and then next Wednesday is the expected federal rate cut. Around, some experts say around could be up to about a quarter of a point. And if we see that kind of a reduction, that 70% that's been on the sideline waiting is going to potentially flood the market. So another pointer that we've given everybody, and this next slide is, and we get the question a lot, is it the right time to buy? And I'll tell you before that, timing the market. This slide here says it best. Timing the market is basically impossible. If you're always waiting for perfect market conditions, you're going to wait forever. Buy now, only it's a good idea for you, your family, and your budget, is what we've always said. And that's the advice we always give. And individuals ask us, is it the right time to buy? And this is the best advice that we can give. Does it work for you? Another point that I'll give you is a lot of lenders are doing what's called an IRRL, interest rate reduction loan. And whereas after you pay, I think it's 9 months in, so you pay 8 payments, or it's 10 payments in 9 months. And if you've reduced the interest rate enough that you can do an interest rate reduction loan. So we've advised our buyers, if it works for you now at the interest rate we're at, get in when the competition is a little less, and with the potential to be able to refinance within that first 12 months. And you've seen the projections of where they're at. So as we said, predicting the market's absolutely impossible. We go off of, and it's why we try to educate you each and every month of what's going on with the Federal Reserve, what's going on with the job market, the inflation rate, the unemployment rate. And these are key indicators in the real estate market. And you can go back 40 plus years. These are key indicators that when policy changes and interest rates either rise or lower. So hope this helped out kind of where we're at with the interest rates. You guys are seeing it on the news, I know, and hopefully this provides some facts and some non-emotional fact-based data for you guys so you can make that decision. But we'll go ahead and wrap it up here for the first episode, and we'll pick up on the next episode on why it's so important to understand what market you're in and the market dynamics. We'll see you on the next one. Thanks, guys.